Investors are looking forward to another potentially great day of trade today. Local markets closed in the green yesterday, and this is amid strength in mining sector stocks. The rand strengthening to its highest level in 3 months against the US dollar. Director at Sanlam Private Wealth, Greg Katzenellenbogen, joins me now to dissect the latest market moves. Greg, good morning. Let's start off, as we always do, with an overview of these latest market developments.
Well, good morning. As you mentioned, that investors are looking forward to another good trading day today. It has started off well. We're up about 0.5%, but of course it could all fall in a heap after 2:30. That's when the US inflation data comes out. Markets around the world are closely watching that. We've got Europe as well up this morning. So, if the inflation data is benign, you can expect markets to continue along its merry way. But obviously, if it shows that the last 2 months of higher inflation wasn't just a blip, as the Fed believes, then you are likely to see that, markets will sell off. But, as shelter is a big component of the US inflation, that has been coming down. So we do look forward. It's unlikely to show that inflation is falling sharply, but hopefully that the rate of inflation is coming down. So markets are looking forward. But at the moment, here in South Africa, started off well in Australia, in Japan as well, and some of the markets in Southeast Asia are closed for the Eid holiday. But Europe is also up quite nicely, and so are we in South Africa. So let's hope that continues.
Well, let's talk about Fitch ratings. They've revised China's sovereign credit outlook from stable to negative while affirming its A+ rating. Talk us through those developments.
Well, the thing is that Fitch has said that because the Chinese economy has been struggling, that the government will have to pile on debt as it tries to pull this economy out of its slump, particularly that has been driven by the slowdown in real estate. And it's, after COVID, everyone expected the Chinese economy to recover strongly. That wasn't the case. And the world's second biggest economy is now struggling. So the government is trying to make the economy less dependent on housing, and will offer some stimulus, and that will mean issuing further debt. But, the market's not really worried about this. China issues debt in its own currency, doesn't have very much in terms of dollar-denominated debt, and it's not really a worry about China as a sovereign story. It's more worried that, higher debt will affect growth going forward. But the Chinese government this morning said they were disappointed by Fitch's thing. They say that they still are on track to stimulate the economy, and they don't think that their debt burden will be a problem. Although I must point out that the debt to GDP has doubled in the last few years.
Well, the next one that we're going to talk about is a big one, especially for developing economies. For years, the International Monetary Fund has collected billions of dollars in fees from its biggest borrowers. Now, with its coffers refilling and interest rates running high, the world's lender of last resort is considering giving them a break. And so what would this mean for a number of nations? Certainly would be a huge, sigh of relief.
So it's not the interest rates that they're paying. It's if a country who's borrowed and borrows more than their limit, so like if you exceed your overdraft, then they have what they call surcharge fees. Now, it's those surcharge fees that, with the surcharges, some of these countries are paying around 8% on their debt, and of course it's not sustainable. If you think that Argentina owes about $4 billion, close on $5 billion, 8%, including surcharges, is pretty tough. You've got Ecuador on $584 million. Egypt is in there, Ukraine, Angola. So some members of the IMF want to reduce these surcharges for these countries and give them some sort of relief. It's not clear yet how many members of the IMF Council are agreed to this, but there's certainly, it will help countries like Argentina, like Angola, Ukraine, Egypt somewhat, if they can get rid of these surcharges fees, which will help them a lot.
So just to clarify, no finality on this then, Greg?
There's no finality at the moment. It's still in the discussion stages.
Okay. So analysts predict that a speedy exit from Nigeria on favorable terms to shareholders is likely to give Nampak's share price a boost. Your thoughts on this? Are there any sort of pending hurdles that might make things difficult?
Well, I think if they manage to sell that business, will be very good. It will be another debt they can get, another millstone around their neck. It's a sad story of a lot of South African companies that invested into Africa, and unfortunately hasn't worked out. And with Nampak, the money they invested in Nigeria was in dollars as well, so that was another problem. But it will be very good news if they can sell that Nigerian operation. The key question then is, will they be able to repatriate all their money out of the country? Recently, the Nigerian government stopped oil companies who were exporting oil from repatriating more than 50% of their profits. So that would be the key. The other problem is that the official rate of the Naira has fallen almost to the same level as the black market rate. So getting your money out is one thing, but also the value of it will be a lot less. But still, if they can get rid of the debt, it will be very positive for Nampak shareholders.
Greg Katzenellenbogen, thank you as always. We appreciate your time and your analysis.